The elephant in the room that we all talk around is on the bigger waters and all these onerous things that are being required and the adverse impacts of them. Why don't we just enforce existing law that requires that everybody that has a federally insured mortgage has flood insurance if they're in a floodplain? We only have 17%. We only have 17% of floodplain properties having flood insurance. Why don't we just enforce existing law and you guys get together with the financial side of this and just make them comply with the law? Then we wouldn't, if we had a larger policy base, we wouldn't have to go through all this other nonsense.
Yeah, you bring up a good point, and it was a point that was made a number of times over the last year. The requirement to have a federally backed mortgage if you're in the special flood hazard area, frankly, isn't FEMA's requirement. It's a lending requirement, and it sits with the lenders, and we do have the dialogue with them. One of the things that happened in bigger waters, though, that I think will help in this uptake is, it was an interesting conversation that I had, but the penalty for lenders not to enforce has gone up significantly under bigger waters. So I think we'll see greater compliance as we move forward. But one of the lenders in the room at one of the meetings I was in says, you know, frankly, if I get a return on my investment, my job's to lend money. So my job in articulating a federal regulation to collect this and to require it and do this, frankly, if the penalty for not doing it is small, I pay the penalty, but I'm going to lend the money and I'm going to move forward. I think part of the answer was strengthening the penalty, going through the enforcement. We've got to get the attention of the lenders and the regulators and saying, listen, you've got to enforce this on our behalf, and you've got to do these issues. But one of the biggest misnomers is that it's FEMA's regulation. It's not. And so how do we influence it? How do we go through? Bigger waters began to address some of that, but I don't have the numbers in the pickup rate in the increased regulation that moves us off the 17%.
Okay, thanks. Another question? Oh, one right there.
Hi, this is Sarah Murdoch with the Nature Conservancy, and thank you, Mr. Miller, for a lot of what you said really resonated related to, you know, we need a mitigation all the time program, and thank you for recognizing that there are significant challenges in executing some of the programs. And I guess my question is, you know, we're really interested and have been for some time in really promoting the role that natural infrastructure can play in reducing risk, and the programs aren't very well set up to support that type of activity in general. And we stand ready to work with you, and it really, you know, my question is, how can we better do that? How can we work with you? We have places all around the country where we're doing this kind of work, and we're really ready to work with you on pilot programs and anything we can do to help demonstrate that.
Yeah, I think there's a tremendous opportunity there. I was really interested in last year. We had a presentation with FEMA for, Roy is going to have to help me if it was just for our staff. But frankly, it was a study that was done out of North Carolina and some other places about the natural benefits. Probably more importantly to that is when we look at mitigation and mitigation opportunities in there, we get involved in this benefit cost analysis. And it's a little easier to do with structural things than it is to do environmental benefit. We came back last year I'm going to mix up time frames here, but the beginning of the year to actually assign dollar values to environmental benefit that move this, and we're getting through some of those analyses and including that more in the benefit cost analysis for projects. But I think the greater one was the stuff that came out of North Carolina and I think Kentucky. It's the studies that they've been doing about the beneficial analysis, and the important thing is the dollar value and the return on the investment as we go through effective land use and effective natural benefits. There's always the trick of how do we pay for it and over what period of time, and how do I get through OMB's discount rates and do the benefit cost stuff. But as we collect the data, frankly, if the data that came out of North Carolina holds true, there's a greater benefit for doing the natural things than there is a lot of the building stuff that we do. And we're very interested in doing that. So we'll be talking.
Hey, right there in front.
Thank you. I'm Mike Walsh. Currently work with Dewberry, but formerly with the Corps of Engineers. Good to see you, Mr. Miller. What I heard you talk about was how to, I don't know, establish or reinforce a national culture of risk consciousness. And I know there's a whole bunch of part of your presentation was in there, but I think that's generally where you were heading. Mr. Miller, I'm glad you brought up hockey, because I think of Wayne Gretzky at this time, and the great one. And the great one always said is skate. The reason why he was so great is because he skates to where the puck is going to be. Which brings me back to Mr. Miller and talking about 2012 and reauthorization. You're certainly skating to where the puck is going to be. Chad, you talked about the 2 different years between 2012 and 2014, and there being a lot of friction and consensus building or perhaps separation. I think that between 2012 and 2014 there was a great deal of friction, and friction brings heat, which the federal agencies go through and the state agencies go through, but it also brings light. And I just recently purchased a house, and my insurance agent gave me a piece of paper that says I'm 97 feet above floodplain, I'm 4 miles from a place, dams and other different things. So I think the education process is happening. I've bought 3 previous homes. I've never seen anything like that. My final home, I've got that all from the insurance agents. So I would ask Chad, should the nation wait until 2017 to go through the reauthorization process, or should we go through the friction earlier than that so that we get the heat and the light?
Great question. We're going to be running on a couple different tracks. I think from an implementation side, no more delaying. We've got to be implementing these things now. And again, what I'm hearing from floodplain managers is those calls, maybe they've decreased a little bit since the change in the 2014 legislation stopped at least going to full risk rate. But here's the thing, even at the 18% or the 25% with businesses, it may not rise to the level of a really high-pitched discussion, but kind of right under the surface. The affordability issues are going to be there. The mitigation needs are going to be there. All of those things are going to be there, and we've got to, as the practitioner community, we've got to start implementing and figuring out how to do these things. At the same time, and that's the parallel track, in preparation for 2017, we need to see what that future is. So I absolutely agree, though, with the friction and the light. There have been some great successes. One of the things that I've talked about, and it's anecdotal, but I'd love if there's researchers in the room, this might be an interesting study, is with all of the grief and issues and heartache that happen with going to full risk rates, I might argue that we had maybe one of the most successful mitigation collective efforts after a large disaster in this country post-Sandy. There was so much mitigation that was going on, and quite honestly, a lot of that had to do with that fear of the rates and those things going up. And people weren't waiting for the mitigation grant programs, they were doing it on their own, and we have I would say thousands of houses maybe that are now mitigated that wouldn't have been, and I think one of the drivers was the legislation.
One more question, you think? I'm asking my timekeeper. Okay.
Hello?
Yep.
Yep.
Sir.
Yeah, my name is Terry Keenan. I'm from Yakima County here in the Pacific Northwest, and I want to ask a question of the FEMA grant programs, and it's about ecosystem benefits. And I just want to point out that we had a lot of difficulty in setting back a levee area, which there was lots of benefits and lots of flood-prone properties. And essentially, we had EPA just came in and had a look at it, and they ran a cost-benefit analysis on the ecosystem benefits alone, and we were all kind of shocked because they came back with 10 years just for ecosystem alone. And the boss, their boss said, no, I don't believe that number, go back, recalculate it, and she came back and it was now 9 years. So, so I guess I would like to say that with the grants that are out there right now, we have a lot of different opportunities, and we have to go through this fairly benefit cost analysis that doesn't give us those opportunities to show those. And so we have gone forward in that particular project now with the Corps is assisting in as a 1135 ecosystem restoration, and which is a good course. But I think that FEMA could do more in the ecosystem recognition, in the benefits, in the analysis. And I guess my question then out of that is, do you have any plans for changing approach in the near future?
Yeah, frankly, we get asked often. And there's a group, it's funny the acronyms you learn when you go to work for FEMA. I never knew what a FIFM-TIF was, and now I are one. So it's the Federal Interagency Floodplain Management Task Force, headed by the Council of Environmental Quality. I chair it along with the Corps of Engineers, with Joel and Darcy. And the discussion about these benefits, the discussion about the environmental benefits there, and I think all of us struggled with doing exactly what you did, is what is the cost benefit over a period of time? How do I incorporate it into the analyses, and how do I fund projects? We made, as I said earlier, we made some progress in that area over the last year, and we're able to include it into some of those analyses. Kayed Lakia is here on our staff, and you may want to talk to him because it is part of that ongoing piece. Whether we've been aggressive enough in incorporating all this and how we address it is still an item for discussion. Bottom line is we want to move in those directions. We think we need to move in those directions and just further than the build infrastructures. So it's a discussion that we want to have. We want to be more aggressive in it. The other part of it for our side, just so you all know, is an ongoing discussion with OMB to satisfy the requirements of the circular. Frankly, one of the things we found last year is there's more flexibility in how we move forward than we originally thought. So as we collect data, which you collected, about the environmental, I can assign a dollar value, show the return over a period of time, we can begin to make persuasive arguments that these are fundable projects and they fit our analyses.
Okay, thanks. Lots of good questions.